and welcome back. In this video, I want to walk you through the 3 categories or types of ratio analysis that you can do on any company. We'll be looking at liquidity and what that means. We'll be looking at solvency and what that means. And finally, we'll be looking at profitability. Hopefully, that one makes a little bit of intuitive sense. So without further ado, let's get started. Hey everybody. This is probably the one section that probably most people who want to learn accounting, this may be what it is that they actually wanted to learn in the first place. We go through all the other minutia and everything of doing the debits and credits and creating transactions and all that sort of stuff to help you get an idea of what types of activities will actually start showing up in what accounts. And if I were to tell you that accounts receivable represents money owed to the company, well, unless you've actually, walked through various transactions and envisioned in your mind this is what is happening, that may not mean a whole lot to you. And thus, a lot of times when people are learning accounting, whether or not they're going to be an accountant in their future life, this is one of the reasons why they teach it that way, is because even if you never ever touch another journal entry in your life, at least you have taken, here's an event, I have translated it into my mind as far as like what accounts it should go to, so that when you do start reading financial statements, these financial statements have some place to go in your head, and you can start looking at something and going, oh yeah, I know what accounts receivable is, I know what inventory is, I know what property, plant, and equipment is, and I know what their purpose is for. And it helps to be able to start making sense out of what these financial statements are telling you. Now, the fun part comes for those non-accounting types. The fun part comes oftentimes when we start looking at how do you analyze companies and their financial performance. And in ratio analysis, there are 3 different categories or types of ratios that we would look at to see how a company is performing. So one of those is liquidity. And when we think about that, you want to think about short term. This is the ability of a company to be able to pay its bills in the near term. So if you want to think about your own personal financial situation, this basically means when my cable bill shows up, am I able to pay it? Do I have enough assets to pay it? Normally that will mean, do I have the cash to pay it? So it's the same thing for a company. We're just translating this into company versus personal. Solvency ratios, on the other hand, is something that we're looking at the financial health of a company for the long term. And this is a measure of how likely the company is going to survive into the future. All right, and so for that, you might want to think about your own personal financial situation, and you may want to think about, oh, what's my net worth? Okay, because net worth is a measure of your solvency over a long period of time. And if we have more debts, especially long-term debts, than we have assets, then it puts us in a precarious position, and it will do the exact same thing for a corporation. And then finally, we will have profitability ratios. And these measure the ability for a company to make a profit. So it measures the success of how well a company operates on a daily basis. And that should be fairly straightforward. Every company is in the business to make a net income. That's what they're there for, and to do that consistently over time. So here's some notes about financial ratios, because in this particular video, I'm not getting into anything specific. I'll have other videos that will focus on each one of these and certain ratios within these categories. So this is just giving you a high-level overview of these financial ratios. One thing to note is that any one ratio is only going to tell you so much about a company. So for example, if I calculate a current ratio, which is a liquidity ratio on a company for a year, that will tell me something, but it's not going to give me a complete picture of how well that company's been performing over time. And so when you do ratio analysis, you won't do it for 1 year, one company. You may, for that one company, do several years. And then you may decide, okay, all right, I may want to do more than that. And for any company, you want to calculate several different ratios. So you'll want to calculate a couple of them in liquidity. You'll want to calculate a couple of them in the solvency arena. And then you'll want to calculate some in the profitability. You want to have several of them that you calculate so that you can get an overall sense of how this company is performing in the short term and in the long term. These are what I call indicators of financial health. They do not at any given point in time tell you this company is tanking or this company is dying or this company is going to close next year or anything like that. It doesn't say that. However, I will do a video on a couple of companies that have failed in the past, and we will take a look at them from a retrospective point of view. And it will become probably very apparent to you that, something was up and probably people should have seen it and gotten out of that company and sold their stock long before it went bankrupt. And so that's going to be an interesting exercise a little bit later on for you to see. Now, doing ratio analysis will oftentimes raise more questions than answers. For example, when I have taught this in classes at a university, we will often do something where we'll take an industry and several different groups of people will work on different companies within that industry. And the one thing that I tell them is, as we start doing this, we may find that there's something that we need to know more about. For example, we worked on the spirits industry, meaning, companies that sell liquor and alcohol. And as we started examining that industry, we found, wow, their inventory turnover is really, really long, which was surprising to us. We thought that their inventory would turn over a lot faster than it did. And as we looked at information about those companies, it's like, oh, okay, now it makes sense, because they may age a whiskey or something like that over several years, or maybe even a decade. They might age something. So their inventory could actually sit on their books for a really, really long time. And so you start to learn certain things about industries that are very unique to them. So you can't say that, this number is the best inventory turnover ratio, and if it's less than this or more than this, then, something's wrong. It's very, very hard to do that. But as you start to look at certain industries and certain companies, you'll start to see patterns in how they operate, and that is what a savvy investor or a savvy employee will be able to see. And also, you need to compare a particular company to its competitors in the industry, because that's probably the best way to find out if they're actually really doing well or not. So where do you find the data? So here's what you do. For any company that you're interested in, you would go to finance.yahoo.com. In the upper left-hand side of the screen, you'll see a place to enter a stock symbol. And here in this particular screenshot, I have entered COST for Costco, and then you'll press go. From there, here pops up the Costco information about the company, the current stock price, what its previous close was, etc., etc. And then on the left-hand side, you will see all kinds of different links. And what you want to do is look down towards the bottom on the left-hand side, and you'll see financials. And under financials, you can look at their income statement, their balance sheet, and their cash flow statement. Now over to the right-hand side, down in the bottom, there's a comparison area. So if we wanted to compare Costco to other companies, we could compare them to Target, which is in their competitive space, and we can also compare them to Walmart, which is the WMT symbol. And that helps you to get an idea of who is in their industry. All right, financial ratios are really, really an excellent way for you, not only as an employee, but as an investor, to get to know who your company is all about, if you want to invest in them, why you should keep your money in them or perhaps get out, those sorts of things. And I'm really excited about being able to show you how these work, what they mean, and how they can help you to be much more empowered. I will talk to you soon.